Let's just get to the brass tacks, because we've been talking about zombie companies for a long time now, primarily because of all the Fed support, the quantitative easing, and all the other measures out there that were making money just easy to get. And, well, if you were a company under stress, well, it was easy to borrow your way out of your problems. I'm wondering if that era is about to come to a close.
Hi, Roman. Thanks for having me. And yes, it is coming to a close. The era of easy money is over. And the era in which you can just sort of put off the pain of corporate bankruptcies is ending. And with Federal Reserve and other central bank policymakers having to fight inflation, the question is what happens to these companies, because they're, as we define it, companies that do not earn enough to pay their interest expense. So they need more credit. They need to be refinanced if they're going to pay their interest payments.
And Lisa, what does happen to these companies? I mean, should we expect to see a wave of bankruptcies, a wave of defaults, perhaps?
Well, it's to be expected, but probably not immediately, because these companies took on so much debt and got so much liquidity in 2020 and 2021. They do have some runway, but it's not infinite, and they're going to have to come and refinance. And also, a lot of them got leveraged loans and other types of loans, which are floating rate. And so as the central bank hike rates, interest expenses will go up higher. And so that's going to put real pressures. And on top of the interest rate and interest expense issues, and inflation is going to produce winners and losers. So we have someone like Exxon, which we highlighted, which used to be a zombie, but exited with some of really robust earnings because of crude oil prices. Yeah. Well, other companies are going to have those as input costs, and not everyone will be able to pass them along. We did an analysis of the top 50 zombies, and already half of them are showing margin pressures.
Lisa, just remind us the technical definition of a zombie company, because we love to use the term phrase because, well, it's so sensational, but what does it actually mean when a company is a zombie?
Yeah, so there's different economists use it in different ways, and I think one generally accepted one are companies that you look for a certain time frame that do not earn enough to pay interest expense, let alone pay down their debt. So they're really using easy credit to keep alive.
All right, Lisa.
Other people seem to mistake them for like companies that are on the verge of bankruptcy. But it isn't. There are firms in there who are I-grade, who might last for a while, but they're using capital that they should be doing investments and productive growth to just pay their interest expense. So the problem with zombies is they do sort of weigh down on growth and economy. Yeah. But the other hand, if you have a wave of bankruptcy, that causes a whole load of pain too. So once you get into this almost trap, there's no really great win-win situation.